Hi everyone, today is 16th of September, middle of September. Looks like some people say September is not good, and it looks like it's so far so good. In fact, August was not good. So it looks like that is not true for this year so far. We still have 2 weeks to go, so we'll come to know. But so far so good. So I've opened this chart, BTC chart, on 8 hours. Now, today I felt like there's nothing to explain, to be honest. And the reason is simple because if you look at it, we have this critical support from where it bounced. You know that this was perfect. I mean, this is like so amazing that the support is 249,900 and the bounce was from 24901. I mean, this is extremely accurate. I didn't expect that, but it's extremely accurate. So this was also pretty accurate, quite accurate. It got rejected from this zone, and this zone was the support, right? And then it acted as rejection. So if you look at, this was the first attempt, I would say second. It bounced, rejected, then supported, then another bounce. That didn't work out. Another bounce, which made another higher level, breaking above critical support one, but not quite. I mean, didn't stand for long, and then retraced, and then moved sideways and touched this one. So people got scared. Why some people got scared? Probably they were tracking this low. And sometimes, in TA, if you find that sometime this kind of move happens for multiple reasons. One of the reasons is there are many stops here. So when there is a low, people put stop loss just below it, very close to it or on it. And what happens is they such those stop loss basically a liquidation push the price, and that's why you see sometimes a spike below it, and many spikes are results of it. So, and this is like another one. So if somebody has shorted, would have probably put a stop loss here, and so the reason could be many things. But this is a typical reason why when there is a major low, then this kind of a new low is made. But this is not quite a new low. It at a lower time frame it looks a low, but if a higher time frame it's not a new low. I mean, because the closing point of it's not technically, yeah, I mean it's a new low, but it's a marginal. So one of the best practices is when you see a major drop like this, you have to have some kind of space, some like 1% rule or 2% rule, just to make sure the stop is not taken out because of some spike. Anyway, so yeah, so that's so, but it's good to see now where it is right on critical support one again. So that's why I was saying that I don't need to add anything here, because it is like swinging among these three levels, support, this resistance, and this one. So these three levels is actually playing the role. When you go at a low time frame, what you can do just for understanding what is really happening, when you draw this, so it looks good at this moment that it is trying to stay above. So it's looking good. This is like, so using trend line and this using this level, we know that this is a congestion area. Yeah, so it's looking good to me at this moment. Now, when if you are very short term, like a day trader, you will be tracking this trend, and when you do that, probably you will consider that okay, 26200, and probably this one to 2600 26,000 is my level which I would be tracking at a very very low time frame point of view. Okay, very low time frame point of view. So below this it could look for further down. And if it goes down, just in case if it goes down, then it will be tricky. In that case, it will become very weak. To me, this bounce was good, and if it goes back to this level, then the probability of breakdown is high. Now we don't have to think about it right now because it's not going down. But just in case if it breaks 26K, then you can say, okay, that's not something good. And if especially actually this level, 25,700 level, if it breaks below this level, that's not good. Okay, this is for a very low time frame, but it's good to understand. It's actually very important for high level as well, because BTC is at a level right now, or a range, price range, where it is going to be very critical. It's a make or break zone. The whole entire zone is a make or break zone. So we can say this is defended here. So that's why it's good to see. Now it is stopped at here, but we would like to see it breaking above and touch, not just touch, but sit somewhere here. So if it can close, if we can get a daily close, let's say on 1 day close over here, then that's a win, a big win to start with. Like, remember when I explained, I had marked 3 levels. This one. So I would say I would now, and remember it could not break above. It could not break above and it went down. So I'm going to do this. I'm going to bring down this and say this is my immediate required level now. Okay. Now this is my immediate required level. This is my immediate required level. And now this level doesn't change. This doesn't level. This doesn't change. I have to keep it. I would like to see breaking about 31,500. No, closing above, not just breaking above, closing above. So that requirement doesn't change. Yeah. But yeah, about this level, so roughly speaking, 27,900. If it can close at that level, and if you want to around probably 28K, if it can close at 28K, that is a big and first win. I'll have to refine this one. This may go up a little bit as per my calculation, which I'll do later on. Okay, right now I'm not in a hurry to do so, but I'll have to touch that one and change that one because of this recent change I had to recalculate a bit. Okay. But anyway, right now we don't have to think about that. The immediate thing is it must not go below this 24,900. Uh, because if that happens, then this is the last support, 23K. Right. So it will be very, very weak in that case. But at this moment, this bounce is so good at a, right? Now the next date is 28th September, right? 28th September, the Fed's, and as per my reading from some of the economists, the Fed is likely to pause, or I would say skip. That means they may not raise interest rate, and they'll look for the next month's data, means September data next month, and decide whether to hike in the month of November. After this, the next meeting is in the November month. So that is as per the experts, economists. Okay, so I'm just kind of translating and just conveying that way. There is no analysis TA can do about Fed's hike, right? So that is beyond the scope, but it is good to know. So 20th of September, we have to monitor. But from a TA point of view, I would say we need 28K. In short, we need 28K, nothing less. And you see, this is a resistance, so it must break above, and then later it must break above this one. So two levels to be broken above, this one and this one. And I would say these two levels are important: 25,700 and then 24,900 on the lower side. So in summary, these are the four levels you keep in mind. This immediate resistance is a will be a good news, and closing at 28K would be awesome to me. I know you can extend this line and probably you need a little more, but I would be happy if it can close about 28K. So I hope this is clear to you. And of course, long term, we'll look into long term as well. There's not a problem. And long term hasn't changed much. It hasn't changed much. We'll look at this, our Bitstamp on weekly. Now, I have been telling you that as long as it doesn't break below green, there's nothing to worry, right? There's no threat. And now you see nice bounce here. Now, the angle could be a little different like this. Remember, the bounce happened from this. So we have to adjust the trajectory like this. There should be some kind of, so it is basically shifting in terms of time. So it has retested this again. Unfortunately, it was so deep because of this big move. But this was the resistance we had highlighted. And now we got a bounce. Now this bounce, as I explained on a lower time frame, we have two next levels to be broken above. So let's see. But on a higher level, because the price is in the green zone, or this, we don't have to. We don't have to worry. Okay. So this is one. We are looking at also one more layout, right? On one more layout. Remember, my down arrow was from this, and it didn't break below. Remember, it didn't break below, right? So this is still good. This is still good. You see, I'll just fine tune it a little bit, not much. I think I should keep. So it didn't break below, so it's still good. And instead of here, now it's bouncing. If I zoom out, this orange level is where, roughly speaking, this is like, why it is sticking. Oh, I had locked it, that's why. Hmm. Yeah, so we would like it to see breaking about the last rejection point on this thing. So we had a couple of techniques. This line, which offered us the support again. So this was a resistance, rejection, breakout, retest, breakout. I mean bounce, another test. So bulls are really defending this level. Which one? So this has become a hot spot. Instead of line, if I may draw a band here, which makes sense. It actually starts from here. If we can closely observe, yeah, you see the whole entire band. So you can clearly see this is the lower part or the bottom formation, and this is upper part. Now it has to go up, of course, and this is the ceiling. It has to break the ceiling. Remember, so we can say this is like currently it has defended, but can we relax? Can we avoid monitoring? I don't think we should avoid. We have to monitor it for right until it breaks about 28K, as I explained. Right. So this is a phase where we can say that It can swing on either side, depends on what level it breaks, and we have the boundary defined. So it's in balance at this moment. Now, is it bearish? It's not bearish. Why? Because the bounce is not, the attempt is not broken. Remember, it has retraced. So what I explained last time. So let me rephrase it again. This was the high, right? This was the high. This was the first major attempt, and I would say this was the second major. So one first leg down, and the second leg down, right? And then each leg had attempt. This was more immediate one, and then this has come late because it was much deeper. So what happened is these are the point of rejections, major ones. Okay. So if it is here, it is like somewhere here. It is like somewhere here. So somewhere when it was here, we cannot say, it's easy to say it got rejected right now in the present, looking at the past. But when it was here, we could not say that it's going to go down so deep. We cannot say that. Technically, it's not it's not a good idea. So when, let's say, it retrace, because when you draw simple a trend line, even trend line, simple trend line like this, you cannot say that it is going to end in this kind of a thing. So over here, you still have a chance to break above, but of course it didn't go well and then made another low like this. And this is because of FTX. So I'm just considering as part of this because this consolidation is not so far from this. So I'm not converting, I mean saying three parts. This was FTX sell-off. So this is more like a retest of this one. Slightly lower, but not much, marginally lower. It's similar range, very narrow range, I would say. That's one. So that's why we have first leg down attempt, second leg down all the way here. Maybe in the line chart, it's more clear actually, like this. And then because this was so deep, um, the bounce is this high. Now, ultimately, this is the boundary. So if it breaks above this one, then it should fly high. There's one more resistance which I'll highlight. Okay. Once it breaks above the prior rejection point, I'll highlight and let you know. So essentially, when you look at the big picture, so where we started with 8 hours, we have to revisit the big picture again and close with the closing price. Remember we did last time. So this I called magical line. I call this magical line. Okay. And so these are the major pivots. I don't know why I have two lines. Oops. So it looks like I had two lines. I don't know why. Maybe just make it overlap. So it's one. Or maybe I can do this. Ah. So these are the key supports. So unless it breaks up below 23K, the trend is that we cannot confirm the downtrend. So this is the first leg down, second leg down, and there can be a third leg down if it breaks below 23K. And it could be very deep. It could go to 10K, 10K, 12K kind of a level. in that case. But when only if it breaks below 23K. So I should revise this and indicate like this. Right? But so this is only below 23K, 22, 23K, not now. We don't have to worry now. And there are a lot of scenarios. Let me tell you, I would not call out 10K, 20K below this one because it can retest this one and go up as well. But we don't have to. This is just for education that this line is so critical at 23K level. And also from my manual calculation point of view, 23K level is important. Okay. And multiple methods that I use, 23K levels is the last level. Okay. But before that, we have 25K level. That is also important. So the price hasn't broken 25K level. Forget about 23K level at this moment. As I said, it's just for education. So clearly we can see that the price is on the upper side. Price is on the upper side. Yeah, like this. So that's why there's no need to concern at this moment, technically speaking. So I hope with this low time frame and high time frame, you get the understanding of what are the key levels, and what is really happening, right? And just to add that there is going to be one more level higher, and once that is broken, we'll see this pattern that I had highlighted last week. This is inverse head and shoulder, which is very positive for bullish. Okay, so that's really look forward because most of the people will look forward for the higher side. That's one. So I believe this is good. There's only one concern at this moment. The concern is from the DXY because it's not giving up. It's not giving up. And it has entered into critical resistance zone last week. And it made ninth green candle. 4, 5, 6, 7, 8, 9. Ninth. So the question is, will it go down or not? It will be determined by this critical resistance zone. If it breaks above, then there is a high probability of continue on the upside. There's one more level at a 107 though. So maybe I should draw this arrow above 107. Well, I would draw that as red line because that must not be broken above 107. That is from my manual calculation. Yesterday I came up with that. So I must add that one. I would not say critical, I would say key resistance, and I would say this one as last resistance before it becomes a threat. Right, so this is a key resistance zone, means important one. And this is the last one, means if it breaks, DXY breaks above this, then it's a trouble, not just for crypto, but I think stocks as well. Yeah, so next week, if the Fed skips and the market, cheers, this could go down, and that's what is the direction. So this direction, I would keep on saying that this is likely to go down because the resistance is not broken. That's why the direction, because the direction is still down. If you look at this, is a big consolidation, and so this is a first leg down, and then whole entire thing is consolidation. This whole entire move that you see is consolidation, like this. I think I can keep this drawing because it makes sense. A big one. Don't want to add too much. This is the whole entire consolidation zone. So after the consolidation zone, it can actually land all the way on this one. And this can be our bull run in a true sense. So this one gave a recovery bounce, and this consolidation is actually giving the trouble, especially this one. And if it starts following this trend, or path, then that will be the bull run for BTC. If you look at actually in the past, this was the bull run for BTC. You can check it out offline. This was the bull run for BTC 2017. And from, that 2018 was the bear market and it started. So DXY is very important at a trend level. Remember, not on a daily basis. Daily basis, you are not going to get the exact output. But when you track at a trend level, most of the time, if not all the time, but the major trends or cycles are driven because of this. So I pay a lot of attention on DXY. But there are some people who try to assess daily. They're not going to get good result. It's not for daily. Okay. You have to monitor the trend. You have to monitor the key resistance zone and support zone. In between, you're not going to see good, because if you look at NASDAQ also went up. So some people say it's NASDAQ is not following. It's not right. It's not accurate because they are missing the trend. This bounce is not trend. Okay. This is called trend. This is called trend. Okay. This is called trend. This is called trend. So this is counter trend, a small bounce under this. And when it breaks above the last resistance, then it becomes a trend. So this is very important point to be noted, okay? Because once it starts going down, you can say this downtrend after this consolidation resume. This is how you speak as a TA, okay? And so basically while it started going down from here, it had one congestion area, huge one actually, because of various factors, macro factors, economic, mainly economic, and then it resumed because so in that case we will expect um you know maybe this trajectory could be like this. So 8 months, 9 months, or until I want to check. Actually, it could go down further also, but this is channel. So it will not go down like this, but this. So in that case, until year end. So that's why DXY is very important, super important. If you have any question, you can ask, definitely. But this is important. So these cycles are important. You see this one was a bear trend. You can look at the BTC. This was a bear trend when it pumped in 2014. 2014. Actually, we can have a quick look. See this 2014. This 2014 was this one. So, in short, DXY is super critical. And this is this is a serious bounce. This is serious bounce. But you know what? No matter how good it is, if you are the one who follows key levels, who is not emotional, who is not assuming, you will see the difference in your trading. It's very hard. Actually, it's very easy. It's very hard because you have a lot of knowledge. I'm not criticizing your knowledge. What I'm trying to say, the child is a good learner. Grown up is not a good learner. And because child starts with nothing, he or she doesn't know and starts learning. That's why. As we grow up, we learn something. And then that if the learning is not right, then we resist new style, new methodology. And that's why we struggle. Because if we give up what we have learned, we think that, oh, I have learned nothing. I'm like a child. But you know what? It's okay to be child. If the method that you have learned is not working, then it is better to act like a child because there's nothing wrong. Because the child can learn new things. So if you have learned something which is working, of course that's good. I'm not saying what I'm explaining is the only way. But if anything that you have learned and that is not working, it is time to review it and act like a child. Because act like a child is no shame, actually. The problem is the grown up do not learn because they don't act like a child. No. So learning something new require unlearning, in short. Other because if they're contrasting or contradicting. But that is hard. That's why it is hard. The unlearning is hard, learning is not hard. So once so you have to learn unlearn bad practices, then only new good practices can be learned. Otherwise, it's very easy. So the unlearning part is difficult. The learning new thing is not. That's my understanding. Why people are not able to follow sometimes. You know. Anyway, so no matter how good this bounce is, I don't care. It hasn't broken the key resistance and last resistance that now I have discovered. So that's why I'm not calling that it has um, invalidated this move and started recovering. Yeah, it has started recovering, but this level is not the level where we can say. So this is very interesting that this level is like 15K of Bitcoin where it started going bounce and ISS, and like 29K, 30K level is not the level where we can say the uptrend has started, right? Similarly, this has started bouncing and now this is like 28K level. We cannot say it is now going for new all-time high. So it's very interesting that these two charts are actually at they are inversely related, and those both these charts are at important level. This is DXY is at important resistance zone and Bitcoin is at important support. Look at NASDAQ. So NASDAQ um, was very strong. Don't ask me why. It's simply because people are expecting that the Fed is going to the central bank basically is going to pause sometime before this year, and that's why it rallied. And that's what happens. The spot market is always futuristic. They try to anticipate and go ahead in time. But let me tell you, if their understanding and assumption turns out to be wrong, let's say in the worst case, if the Fed becomes aggressive for whatever reason, then it won't take time to dump. It won't take time to dump and reset also. And it can happen very fast. Within a month, it can reset whole entire thing. So one has to be very careful. And again, I would track this one. Below 14,500 is a red flag, in my opinion. Though it's very close, I would personally, I would believe that that's not a good sign. So this is very usual: down, up, down, and then probably taking time and go up. But if this is broken, then it could go deeper, and that will be considered as a bad sign. So Nasdaq is still good, but Nasdaq has strength because it's not as speculative as Bitcoin. That's why the money will definitely go first in a solid asset and then goes to speculative asset, in my opinion. When the DXY started going down, then that's where the money comes to risky asset. It's similar. Like if you have a lot of money, would I mean if you have if you have good earned money, the money goes to risky asset little later. It's like that. Nobody put 100%. I mean, there are people who don't believe in what I said. They would just go for 100% in crypto. I don't believe that's it. I don't think that's a good way. But yeah, there are some people. Anyways, the point is the crypto is a risky asset, speculative asset. So the money will come, I believe, but only when the DXY becomes very weak, because the money, a lot of credit money comes into crypto. That's why if the dollar becomes expensive, then it's not going to help them. Of course, these yields are going up, interest rates are going up. Now it's a near breakout. So this is also very, very tricky. Can it go down from here? I would say seeing is believing. The probability of breaking above for the yields are now high after this bounce. But I would like to see how the week closes, next week closes, because this is a potential double top scenario as well. And again, I don't want to assume it. If you just look at the probability wise, the breaking out probability is high in this case, because it's far from the support. But since it hasn't broken, we'll have to wait and watch. But yeah, it looks scary enough. And that is because the bond market doesn't believe that the Fed will stop. That's why. The Fed, if not now, they think it will raise interest rate in November. That's what the Fed, I think the Fed is believing. Sorry, the bond traders are believing, because that's why they are pumping. That's why, I mean, that's why the yields are going up, in my opinion. The bond price would go because the old bond price will have lesser price, so that they'll dump bond, but the new bond will have higher yields or interest rates. Okay, that's we can look at dominance chart once more. The Bitcoin dominance is getting better. So yeah, so it's still, so this is the time when the Bitcoin dominance is high. Not financial advice, but it is a good idea to have more Bitcoin. When the Bitcoin dominance goes down, Bitcoin can be reduced, and some alts can be taken, because especially when the Bitcoin is also at support, because the Bitcoin makes little move compared to altcoin. Some people make mistake. They put a lot of money into altcoin when the situation is delicate. When the situation is delicate, a lot of money in alt means a lot of risk. But the BTC moves slower than altcoin, the other coins. That's why it is relatively safer comparatively. Right? When the BTC is really in a full swing, like in uptrend, then focusing more on altcoin makes sense. Or when the Bitcoin dominance goes down significantly, when the uptrend is on, then the focusing more on altcoin in terms of percentage. Okay, it's not black and white picture. All BTC versus, I'm not saying all BTC or all altcoin. I'm not saying that. It's not either or. It's about percentage. Okay, so I'm not in advising, so I'm not going to give you percentage, right? What I'm trying to say is the BTC can be more and the alts can be lesser when the time is tricky, when the time is sensitive, very important phase. And when the BTC is in full swing, right, when the trend is up, basically, and the BTC dominance starts going down because the alts are pumping harder, then focusing more or percentage wise, it makes sense. So that's one of the best practices. But as I said, whatever I say, I don't as I mean it's up to you, because people don't take new information often. They try to believe in their what they believe. So, but I my job is to explain what I believe in, right? So if it makes sense, then you look into it. Otherwise, it's up to you. Okay, so I think of the first part we covered BTC and us the reference data, right? So this first session is over. Any question, you let me know. This is very important. The next week is very important. Last week was very important. I mean, this was very important because we had the inflation numbers. Inflation's number are sticky, remember? It's not. So, but they're sticky, but not rising. So market is happy. And but it's sticky. That's the problem in a longer run. So again, the next month's data will become important because if there is no change in July, August, no major change, 0.1%. So that's why we have to wait for one more month, unfortunately. Okay, so I'll end the session here and